The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Volatility back in the markets and plenty for us to discuss here today as we wrapped up the week of trade. Grains are flirting around some key areas of support and resistance, and a lot of folks watching that closely. You got a lot of outside market concerns. You got war in the Middle East that has some folks concerned too, and traders are watching that closely. We got a lot to dive into today here on the show. Joining us, we have with us Tommy Grisafi with Advanced Trading ATI Pro Media. Tommy, how are you on this fine fall day? It's good to talk with you again.
I'm glad I was able to take a break and come talk with you. We have a lot to talk about. This last few days was probably some of the craziest days here in the last month. And I thought last Friday was a good one with the beans up 50. But boy, Jesse, what's happening today with all the markets and what happened yesterday with Fed Chair Powell just talking at an economic meeting saying inflation isn't at the level they want and rates may stay higher for longer. Ooh, the markets didn't like that.
No, the markets did not like that one bit. And, I know Thursday we saw a late short covering type rally, especially in corn, and got us through that mystical $5 Dece corn level. And I know soybeans got through 13 earlier in the week, but then it seemed like we saw some profit taking in the grains on Friday with some of the wider maybe economic concerns or a war in the Middle East and worries about, going into a weekend and not being covered. So it felt like fund traders especially kind of hammered the grain markets a little bit more, especially corn and beans on Friday, Tommy. Is that kind of your feeling?
Yeah. And the mystery of corn being up 14 on Thursday, no one really knows why. There's no pits. I used to go down the pits and say ADM bought 1,000, this guy bought that, O'Connor's did this. It just happened. I just watched it on my phone. I watched it on my screens. Jesse, when I'm not recording stuff like this, there's usually like 40 tickets up behind me, and something happened today that was kind of a little black swan. Gold exploded up to $2,009 an ounce. You could have bought gold at $1,750 just a few weeks ago, and the stock market was on the lows. And I almost wonder, and I can't prove it, but the funds are very, very short corn. I feel like it's a risk-off trade and get to cash. And if you were short futures and you want to get to cash before the weekend because you're nervous about what's happening in the world with wars, multiple wars, Russia and Ukraine, and now Israel, Gaza, and all the people supporting those movements, you get to cash. And when you take your cash, something happened yesterday that all the markets, the 30-year bond, the 10-year note, the 5-year, the 2-year, the T-bills across the whole interest rate spectrum, or whatever you want to call it, the whole curve hit 17-year highs yesterday. And so grandma sitting at home can take that money and make 5%. Well, that same hedge fund manager, if they're worried about the stock market going down, they can sell stocks and get to cash. You don't always have to be long. If you're short 100,000 corn and you're worried, you can lift 25,000 for the weekend. And I bet you in the next few days, when we start to look at open interest and actual fund positions, we see that the funds aren't as short as they used to be.
Yeah, that's a great point. In times of war and turmoil and unrest, gold, crude oil too, tend to be those safe havens that a lot of folks will tend to flee to, especially some of those fund managers and the big traders moving all that money around. I mean, energies as well. Crude up a little bit, up probably 1% on Friday. So maybe not as much as gold, but to your point, we start to see money move to a lot of those safe havens, and to your point, get the cash, Tommy.
Get the cash. And you're a young man, but for the last 15 years, cash was trash. Now cash is king. Literally from 2022 all the way back to '07, the only way to take cash and turn it into money was to either like buy farm ground, buy the stock market, buy this, buy that, and put your money to work. I actually think it's totally 100% acceptable to just sit on the sidelines. And if someone's a great stock portfolio trader, they're always going to tell you why you need to own this stock, that stock, this stock. But if the markets truly have a really big downturn, that would look like Dow down 1500, Dow down 2000. We haven't had one of those in a while, but I didn't know better. Something like that's brewing. If that happens, you're going to see a big flight to quality. You'll see what you're seeing today. You'll see that gold spike. You'll see interest rates. They'll run to the bond market. But Jesse, they can't run to the bond market like they used to because we always had that ultimate buyer of the bond market during those '08 through 13, 14 time, and then also during the pandemic. The United States government, the Federal Reserve, has bought trillions of dollars of bonds. They are no longer in the bond buying business. They're just holding their portfolio till maturity or selling it. And other people are selling their bonds too. So a lot of times when something bad happens in the world, you run to the bond market for that flight to safety. But with all those things we just said, at gold at $2,000 an ounce and crude at $90 a barrel, you don't want to assume that interest rates can't rise. And with what the Fed said, Jay Powell, he said interest rates are going to stay higher for longer and we may have to raise rates. And that's really, it's creating that giant risk off trade.
Very much so. Very, very much so. And, we've talked about this before, Tommy, with credit card debt at such high levels, tied in with the high inflation. We're seeing the impacts, I think, at the meat case, for instance, in the livestock market. Look at weekly export sales for beef with the dollar being where it's at. 400 metric tons this past week for beef export sales. I thought that was a typo when I saw that, Tommy.
No, I mean, there's so many variables. Look how bad the cattle market did this week. I mean, look how bad the live cattle market did, the feeders. I just had a client buy a couple hog contracts. I mean, these markets have sold way off their highs. Now, as you know, as you talk about the cattle market, there's the futures market and there's that cash cattle trade. And then you have the cutout and everything else. It's very dynamic. I hope with how, like you said, people are stressed out with credit cards. I was up early this morning and CNBC had a story. They had the pie graphs of who's stressed out more, men or women, different people in different
Mm-hmm.
economic classes. And people in America are the most stressed out financially as they've been since the great financial crisis of '07, '08. So, yeah, that could hurt meat prices and meat demand a little bit.
Oh, and it could it just hurt the overall ag economy too. And so, put things into perspective for me, for our farmer and rancher who is sitting out there listening here. Harvest is on the downswing. I'm hearing a lot of farmers who've been putting quarter beans in storage. You got cattle guys and hog producers who might need to get some feed needs. There's a lot going on out here. So put this into perspective. What should folks really be thinking about in terms of their marketing plan and managing their risk as we see volatility come back into the ag markets?
Yeah, great question. So we had the spike in soybeans. Over last week, we put on 60, 70 cents in beans. I'm sure beans didn't close today like everyone wished, but they were up last night and they were up a lot yesterday and whatnot. And corn had a monster rally off its 470 lows up to that 510 level, hit about 509. If you get a rally like this, we're about halfway through harvest in beans, a little more, and we're getting rolling pretty good on corn. At this point, what crop you have, whether it was hot and dry or too wet. You know how many bushels out there. Clients I talk to have a few more bushels than they thought. So even though the price isn't as high as they would wish, they're more happy that they have the bushels. And as long as they have the bushels, they'll be okay. Farmers have a great attitude. I mean, if they're out there harvesting a crop, you and I will both be in Fargo next week. I mean, the North Dakota farmer, I've never seen him or her so happy because they have the bushels. Whether corn's 490 or 510, doesn't matter. We're in the bushel business. They're in the bushel business. You're in the bushel business. We need the bushels. So the price we can manage. And did we get the bushels? Now, at this point, you said, what do you
Mhm.
do? Do you have storage? Are you going to pay for storage? Can you store it? Or are you going to sell it off the combine You can call someone like me, or they can click the mouse and do it themselves. Are they going to go buy a future, buy a call option, buy a call spread? Do they want to sell cash grain, take the cash, pay off operating, and buy some type of derivative, whether it be a call spread, or a future?
And that's the big thing. And you mentioned storage or selling off the combine or whatnot. With high interest rates, I mean, DP's not cheap this year. There's a lot of things to take into consideration, but it comes down to what's your operation look like? What's your bottom line? It's not a one size fits all approach, right, Tommy?
Right. So take the soybean market. Let's just count on our fingers, right? It's costing 8 to 9 cents to store a soybean, whether it be in your bin, someone else's bin. So here we are, November options expire next week, and then November futures will expire. So we have December, January, February, March, April, May, June. I'm up to 6 months, right? Well, July futures are 50 cents higher than we are now. But if you take that 9 times 7, that's exactly where the no July spread is. So it feels like there's big carry in the market, and there is, but interest costs are and carrying costs and storage costs are just going to absolutely take all that money from you. So with all these new soybean oil plants opening up, if they want the American farmer to store his or her grain, they're going to have to pay him a sweet price in the future. And the farmer needs to take the pencil out and do that math, Jesse.
Definitely need to. Tommy, great thoughts as always. Before
Thank
we
you.
wrap it up today and let you go, anything final you reiterate for folks today?
Well, stay safe out there. Our friends up in the Red River Valley just finished sugar beet harvest. That's awesome. Another great harvest in the books. But there's still a lot of corn out there, and be respectful of the markets. Outside markets open at 5 o'clock on Sunday. Take a look at the markets on Sunday. See where crude oil is. See where the dollar is. See what's going on in the world, and adjust your positions according to that. Thank you, sir.
You bet. Tommy Grisafi with Advanced Trading and ATI Pro Media. We always appreciate the time. Thanks for joining us. Have a fantastic weekend, Tommy. We'll talk to you again soon.
Thank you, sir.
All right, that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.